Hello everybody, it's great to be back with you today for the next quick Reno-Sparks real estate market update, this time for November 2022.
Assist to sell way smarter.
Interest rates have been on the rise, which means prices have been softening up. Will that continue moving forward? What about homes for sale? Are there more or less? What does all this mean for the real estate market moving forward? We're going to answer those questions and a whole lot more coming up here in just a moment. Before I get to that, though, I do want to mention a few things. Number one, this is for the Reno-Sparks metro area only. Does not include Fernley, Fallon, Carson, Dayton, Minden, Gardnerville, etc. If you happen to live in those communities and need more information, don't hesitate to reach out. You can drop us a comment below. You can call us, email us, text us. There's a variety of ways to get in touch, and we'd be happy to get you all of the stats and figures you need to make a good informed real estate decision. Now, this is for single-family residential properties only, does not include land, lots, etc. Business opportunities, really houses, single-family condos. It's intended to be a 30,000-foot macro overview of the market. We're not going to get into individual price ranges, neighborhoods, etc. We're just going to kind of give you the overview. Now, if you happen to be thinking about selling a home, or maybe you're thinking about buying a home, you got your eye on something, and you want to know the accurate value of a piece of property, swing on over to our website at forrenohomes.com. Right here front and center, want to know what the value of your home is today? Find out now. Click that button. Type in the address, and we're going to give you an automated valuation report, but then we're going to follow it up with a more detailed CMA for you. There's no cost, no obligation. We just want to make sure you have the best information available. So with all that said, let's dive into the charts and numbers. Now, the first thing we always look at, interest rates. Why? Because they have the biggest impact on the market and on prices moving forward. And this is really the big story of 2022. As a matter of fact, we were sitting about this time last year right around the 3% mark. Today, we're sitting at just right at 7, maybe slightly over. The last time we saw interest rates this high was back in 2002, 2 decades ago. Now, as you can see, interest rates have, they were up at around 7. They dropped significantly to under 6. We saw them pop up a bit. So they go up and down, but overall the trend has been down for really the last 20 years until recently. Now, I wanted to compare that to the median price over the last 20 plus years. Now, obviously 2002 starts here, but look what prices did really in 2002. As we saw interest rates drop, we saw prices consistently rise. We had a flat spot here in the Great Recession in the last downturn. And notice what happened here in 2018, 19 into 20. Home prices were relatively flat. And if we go back to interest rates, look what happened here. We saw a rise in interest rates in 2018, 19, and that made prices flatten out. So interest rates have a direct correlation to prices. Now let's talk about the median home price right here in Reno-Sparks. And there's actually some slightly good news. We're at $540, which is down significantly this year. And actually we're completely unchanged from last year. Now, explain these charts real fast because they're all going to look the same. When it says prior period here, all these numbers are for November, but these are actually sales statistics through the end of October. Because as I film this, it's early November, so clearly we're going to have all the November numbers in. So these are going to be through the end of October. So the prior period would be September of 2022. Obviously, the same period of prior year would have been October of 2021. So the interesting part is prices have not changed one bit. We've done a full circle, if you will, a round trip. From 540, we went all the way up to around 615 in May, June was the peak of the median home price. And now we've fallen back down to 540. Now, it did actually drop to 530 last month, so we are back to that 540 range. But as you can see, a pretty significant drop in home prices over the last year or so. Let's talk about the number of closed sales. Now, these are the homes that came on the market, sold, and closed, meaning somebody bought them. They're in new owners' hands, and that happened all in the month of October. We're actually down 21% from September, where it was 475. We're sitting at 372. We're down 34.7% from last year at 507. Now, you can see the chart here. This isn't at all unusual. What is unusual is the fact that we didn't really have a good peak in sales like we normally did. Look at the peak. Are normally up in the 500, 600, 700 range. And now we normally see a fall off towards the end of the year. I'm talking November, December, and January is where we see the most significant drop in sales. So I would expect this number to be higher in October, but given the economic climate, interest rates, and so on, we're seeing that pullback early. It's going to be interesting to see how sales rebound rebound over the next 3 to 4 months. Now, if you look at close by price range, no major surprises here. Most sales are taking place between 4 and 5, 5 to 6, and they start to tail off when you hit that 600 plus mark until, of course, you get to a very low sales figure at the 1.5 million plus. Now, let's look at number of new listings. Now, these are different close. These are just the listings that came on the market in October. So these may be sold, these may be pulled off the market, but it's just the total number of listings that entered the market in October. So if a house came on the market, it's going to show up here. We're down, it's 420 was the number of listings in October 2022. That's down 22.9% from September and down 32% from last year where we had 618. Now let's look at the new listings by price. Again, not a huge surprise here. However, we are seeing this lower end stuff. We're seeing more and more listings, the 3 to 400, but the majority of the listings again are that 4 to 600 range is where the majority of listings are coming on the market. Now let's look at actives. Now you may be saying, well, what's the difference between active and new listings? The active listings are the total number of listings taken at any time. 1,265 is where we stand. That's down 9.5%. September, where we're sitting at 1398, but up a whopping 104% from the same period last year where we only had 620. Now, to be fair, this is abnormally low number of homes on the market, and that's really what drove prices. Low interest rates, but very few homes to choose from, which meant prices got driven up, got pushed up by people bidding for homes. This is a normal number of homes on the market, anywhere from about 1,000 on the low side up to maybe 13, 1,400. There's a few years in there where we had more, but as you can see, this kind of bracket is normal. So we've really just bounced back to a more normal level of homes on the market. But let's look at active by price. That's where things get a bit more interesting. Now, obviously, the 4 to 600 range we've talked about, that's where we're seeing the most actives. But look at the number of homes from 750 to a million, to $1.5 million, and $1.5 million plus. Quite a few listings over here. But if I go to close by price, not as many sales. Let's look at months inventory, and this is always a fascinating chart. Right now, we're sitting at 3.4 months. Now, just real quickly on the month supply, where they come up with this number, where we come up with this number is, let's say you have 1,000 homes on the market, and on average, you're selling 500 a month as a market. That would be 2 months inventory. 500 times 2 is 1,000. If you had 1,500, it'd be 3 months, 2,000 would be 4 months, etc. So it's really just the total number of listings and how many months it would take to sell those through based on the average number of sales on a monthly basis. Right now, we're sitting at 3.4 months. Now, again, shot up significantly as interest rates went up, but we're still back to a fairly normal level. If you look back all the way again to 2012, 3 months to 2 to 3 months is considered active. Now we've had a really strong market, so you could argue that there's been a little bit lower inventory than we probably should have had to keep prices more stable. If we went up here to about 3 or 4 months, I think you'd see a little bit more stable prices in terms of staying somewhat flat, not going up as fast as they did. However, we clearly saw us drop into a very strong seller's market during COVID and lower interest rates, etc. So a lot of people think, well, we're shifting back to a buyer's market. And in some price ranges, that's the case. But in the overall market, we've really just bounced back to a more normalized market. Now, will that continue? Time will tell. Now, let's look at months inventory by price range, though. And this is where the story gets interesting. If you are in the $1.5 million plus, you're well over 8 months inventory. And that means you're clearly in a buyer's market. You're reaching 5 months inventory from $1 million to $1.5 million. Again, not firmly in a buyer's market, but you're heading that direction very rapidly. If you're 750 to $1 million, you're well over 4.5 months. Again, that's more stable territory. Once you get that 5, 6, 7 and above, that's when you start hitting that buyer's market. However, down in the 2 to 3, 3 to 4, 4 to 5, 5 to 6, 6 to 7, we're still in that 2.5, 3 range, which is a more stable. So the good news is things are still strong, things are still stable. We have seen prices soften, but it's not as bad as many would have you believe out there. Now, what is a bit concerning is unsold inventory. Now, what this means, people tried to sell their homes, they put them on the market, and they either got pulled off the market, withdrawn, or they expired. They never sold, they expired. Now, this is actually not only rebounded, it's kind of overshot what we would normally see. And again, going back to 2012, about a decade, unsold homes usually range between 80 and 120 range. They kind of bounce around. Now, obviously, everything was selling in the last year and a half, 2 years, but that has changed drastically. We're seeing a huge spike in the number of unsold homes, homes not moving, not selling, and being pulled from the market. Now, normally when you see a spike in unsold listings, softer prices follow suit. Why? Because, well, if you're not selling your home, you have to lower the price, you have to make it more attractive to buyers, and so on. So there you have it. The interest rates are definitely having an impact, but we are seeing a more normalized market. We're seeing prices somewhat stabilized. Now, will that continue going forward? A lot of it depends on the overall economic situation, interest rates. But if things change, rest assured, we will cover it right here on the Reno-Sparks Real Estate Market Update every month. And I do look forward to seeing you next month in December. Have a great November. Talk to you real soon. Bye-bye, everyone.
Assist to sell way smarter.